Good evening, everyone. It is 8 o'clock. I'm just trying to see, can you hear me? If you can hear me, type yes in the chat box. Okay, great. We're getting some yeses in. I just wanted to make sure that everyone can hear. Okay, we're going to give it one more moment and then we will get started. Thank you, everyone, for taking time out of your busy evening to join us. We're going to talk about cryptocurrencies. We're going to talk about blockchain. We're going to have a little bit of fun. And hopefully you will learn a few things about investing in this market and what to look for. So with that said, I am going to get started. Welcome to Cryptocurrencies and Blockchain 101 for Total Newbies. In this session, we're going to break down cryptocurrencies and blockchain, which a lot of people have not heard of. So we'll talk about that. And we're going to do this in a way that you can understand without all the flashy jargon and the pretty words and the flashing lights and everything. I wanted to make this as plain and simple as possible. So let's get started. First, you might want to know who I am and why am I qualified to be here. My name is Dr. Kimberly N. West. I've been a cryptocurrency investor for only 3 years, which is still longer than a lot of people. I don't consider myself an expert or a guru, but I do lots of research and I'm pretty well versed on the subject. So basically, I'm just like everybody else here on this webinar. I'm just a regular person who was curious, and I wanted to try and figure out what cryptos were about 3 years ago. And that's when I bought 3 Bitcoins. And at that time, they were about $480 each. So I held on to them as I do some of my investments. And now that particular investment is worth about $47,000. So I don't claim to be a millionaire. I don't claim to be a crypto millionaire, but I've done pretty well in the market, and there are some tips and tricks I can show you to do the same. I was just sticking my toe in the water to see what happened. One thing I won't do is waste the next 20 minutes of your time regaling you with all my accomplishments and things that I've done, kind of like they do on other webinars, because all of our time is valuable, and I'd rather spend the time giving you some real actionable information. But I will tell you that I'm also a successful investor in traditional stocks and bonds as well as real estate. I do some public speaking. I'm an author, and I'm a serial entrepreneur. I own 6 businesses, and 4 of them are basically passive income. So I'm doing pretty okay. I created this course because I was hearing and seeing a lot of people talking about cryptocurrency on Facebook, on Twitter, in the grocery store, you name it, people are talking about it. Even the Uber drivers are talking about Bitcoin and Litecoin and stuff. And a lot of people are asking questions. I also saw a lot of misinformation that was being passed around. So the truth is, getting into this market responsibly requires some research, tenacity, requires research, requires a little bit of not technical knowledge. And did I say that it requires research? The other thing that really bothers me are the so-called gurus who are all too willing to get you on a webinar, and they will spend, 30 minutes telling you about themselves, and then 15 minutes they'll give you some information that you can use, and then another 15 minutes they'll try to sell you a $900 product. That is not the case here. So enough about me. If you want to know more or you'd like to get in touch with me, you can always contact me at info, at healthywealthyentrepreneur.com. So let's get into a little housekeeping very quickly and then jump straight into some usable content. There's a downloadable workbook that's associated with this class, and I don't know if you had an opportunity to download it, but what I will do is make it available to you right now. It's going to pop up in over near your chat box. So I've made the downloadable workbook available. It's just something to make taking notes easier. What also is in there, what it also contains, are my personal list of the top 10 cryptocurrencies available. And this information is current as of December 17th, 2017. So it's very current. I try to make sure that everything is as current as possible because this market is so volatile and it moves so quickly. So get a chance. I'm going to leave it up for about another 30 seconds to download the workbook, and then we'll get back into the presentation. The other thing that the workbook contains is a glossary of terms, which I haven't seen a lot of. You know, with every new technology comes new jargon, new words, new things that we have to learn. So I've included a glossary of terms, and I've also included 10 ICOs to look for in 2018. And an ICO is an initial coin offering. Just like the stock market has an IPO, initial public offering, when a company is about to go public, cryptocurrencies like Bitcoin and guap, which is a new one that's coming online, have ICOs. So I've also given you a list of my top 10 picks for 2018. Let's see. Oh, the special offer. Yes, there's a special offer for those who stay until the end of the presentation. Believe me, it'll be worth your time to stay. If you have any questions, you can put them in the chat box to the right, and I will get to them near the end of the presentation. But one disclaimer I have to make is, since this market is fluid and constantly in flux, all information is accurate as of December 17th, 2017. I actually updated a couple of things yesterday, so it's even more accurate than that. And it's subject to change at a moment's notice depending on the market. But quarterly updates to the course will be made. And again, if you have any questions, you can always contact us at info@healthywealthyentrepreneur.com. And now let's get into some real information. I'm curious. I want to take a poll. It's going to pop up on the right-hand side also. I have a question for all of you. Do you feel like you understand the cryptocurrency market? Your choices are yes, no, and a little. I would really appreciate it if you would answer that one question before we get started. That'll help me tailor the presentation just a little bit more. Okay, gonna give it a couple more seconds because we've got a few more, looks like, coming in. Okay. I'm going to end the poll now. And it's very interesting. No one said yes. No one said that they feel like they understand the cryptocurrency market. 43% of you unequivocally said, no, you don't understand the cryptocurrency market. And 57% of you said that you understand it a little. And those are good numbers because this is a beginner's class, a class for newbies. So that's pretty much what I expected. We're going to get into what we are going to cover in this hour. So welcome to Module 1. What are cryptocurrencies and blockchain, and how can they make money for you? I'm sure that many of you are curious about this so-called 21st century money of the future. In fact, I know you are, otherwise you wouldn't be here. So congratulations. Feel free to ask questions in the chat box. You've come to the right place, and I'm glad that you're going through this course because the future of cryptocurrency and blockchain, which we will talk about. In fact, it looks like there's going to be more money in blockchain than there are in cryptocurrencies. But the future for both of them look pretty bright. Sorry about that. We'll be covering 7 topics. What is cryptocurrency and how does it work? What is blockchain and how does it work? How are cryptocurrency values determined? What can cryptocurrency be used for? Because if you have this huge portfolio, you've got to know what you can do with it. What can blockchain be used for? And again, blockchain could be the real category killer eventually. What are the risks involved with cryptocurrency? I don't want you to go into any kind of investing blindly, so you need to know the risks. And we'll take a look at your personal action plan. What are your next steps going to be? So, what is cryptocurrency? Pretty simple question. Cryptocurrency is a digital version of money where transactions are done online. So think of your online transactions with your bank. It's a little bit different from that, but it's very similar to that. A cryptocurrency is a medium of exchange, just like your normal everyday currency, just like the US dollar, just like the euro, just like pounds sterling. But instead of going through normal bank channels, it's designed for the purpose of exchanging digital information and money, which is Bitcoin, Litecoin, Ether, etc., through a process known as cryptography. And there's a definition of cryptography in your glossary if you downloaded the workbook. Now, the first ever successful cryptocurrency emerged from the invention of Bitcoin by Satoshi Nakamoto. This was then followed by the birth of other types of cryptocurrencies that tried to compete against Bitcoin, but Bitcoin was the first out of the gate. Currently, though, there are about 1,200 cryptocurrencies available in the market, and there are more coming online and being proposed every day. So you've got to keep your eyes open. You've got to do your research, as I said earlier, and really do your due diligence to make sure you are investing in a solid cryptocurrency. Now, here's the thing about Satoshi Nakamoto. Here's just a little bit of I guess, folklore. No one really knows who Satoshi Nakamoto is. It's kind of an enigma. Some people believe that it was a group of programmers that got together and created Bitcoin and just used Satoshi Nakamoto as a name. There's another rumor that states that he or she is a Japanese author of a 2008 white paper that described the cryptocurrency Bitcoin. There are dozens of rumors that are circulating about who this person actually is, but it really doesn't matter. Satoshi Nakamoto is the person or entity that is credited with starting the entire market, but we don't know who he, she, or they are. I suspect that there are a bunch of people who are scouring the earth and doing all sorts of cryptic things trying to find out who this individual is. Just a little piece of folklore on cryptocurrencies and Bitcoin. So how do cryptocurrencies work? To start, you need to understand that we currently operate in a centralized cash network. The problem with a centralized network is in the payment system are the fees and markups that are constantly applied to goods and services. So, you know, when you purchase things online or in the store, or you may not immediately realize it, but you're incurring expensive transaction fees, you're incurring markup fees, you're incurring so many fees, credit card and debit card processing fees, handling fees, and you even incur these fees when you're paying with cash. That's one of the reasons a lot of merchants, a lot of companies stopped taking American Express at one point because their merchant processing fees were too high. So that's what happens when you're dealing with a centralized market. These fees drive up the cost of the product or the service or that you're purchasing. And this is always done behind the scenes by a central server at your bank or their bank. They're talking to each other, and everybody's keeping track of your balances and what percentage goes to this entity, what percentage goes to that entity. So that's the crux of a centralized system. So for example, you may buy a $5 pair of socks, but in the end, you wind up paying $7.50 for those socks because of all the additional fees that have to be paid to multiple entities. Does that make sense so far? I'm just curious. Let me know in the chat box if I'm making sense to you so far. Okay, I got a couple of yeses. Didn't get any no's, so okay, I must be explaining it okay. So the reason why cryptocurrencies are in such demand right now, besides, you know, the me too, I want one too kind of syndrome, is because Satoshi Nakamoto successfully found a way to build a decentralized digital cash system. Now, a decentralized system means the network is powered by its users without having any third party. There's no central authority, there's no middleman, there's no extra person or any extra company that needs to control it. So the central banks have absolutely no control over it. The government even has absolutely no control over it. But we expect that to change pretty soon because, you know, the government likes to get into anything that winds up being profitable. And it's just going wild. It's kind of the wild, wild west. So I predict in the next 18 to 24 months or so, we're going to see some kind of regulation of cryptocurrencies. When you spend money online or with a debit card, that third party is involved with your bank. When you use cryptocurrencies, there is no third party. So it's a one-to-one transaction, which is one of the reasons why cryptocurrencies are so attractive. Now we're going to flip over for just one moment, and we are going to address blockchain technology. So we've given you a basic, very, very basic understanding of what cryptocurrencies are. It's just basically digital money that floats around the internet from one to one, between people, between computers even. What is blockchain technology? Blockchain technology functions in managing and maintaining the cryptocurrencies by using a growing set of data blocks. And this is the decentralized system known as the peer-to-peer network. And that is also included in your glossary. In blockchain, once a piece of data is recorded, it cannot be edited or changed. Why is blockchain technology so important, particularly when it comes to cryptocurrencies? It is the underlying backbone of and what powers all cryptocurrencies. Every cryptocurrency, all 1,200 plus of them that have been created, rest on top of blockchain technology, which is why I say that blockchain technology may eventually become more profitable than the cryptocurrencies themselves. It's kind of like the idea of the shiny object and what makes the shiny object. You know, don't chase the shiny object, chase the thing that makes the shiny object, and you'll make more money. The blockchain is a public ledger of every transfer that the cryptocurrency community makes. So, for example, we have Bitcoin. Bitcoin is a cryptocurrency community. They have their public ledger built on blockchain. So picture a spreadsheet that is duplicated thousands of times across a network of computers. Then imagine that this network is designed to regularly update the spreadsheet. And that's basically what the blockchain is. That's a very simplified way of saying it, but it was created using different algorithms and some highly complex math. So on the surface, it looks very simple, but underneath it is quite complex. The information held in the blockchain exists as a shared and continually reconciled database. This database isn't stored in any single location. So meaning that these records are really public. And if you know anything about computer programming, this is public as it could possibly get. The records are public, they're easily verifiable, and they have no single point of failure. There's no centralized version of the information existing for a hacker to corrupt also. So if one computer loses the information or one peer loses the information, it can very easily link up to the other computers or the other peers in that network, in that community, and get the information all over again. These are hosted by millions of computers simultaneously. And the data, now notice I'm saying the data, is accessible to anyone on the internet, making it thoroughly transparent. There are a lot of uses for blockchain other than cryptocurrencies, and a lot of them are in use or under development right now. Smart contracts are starting to become very big on blockchain. Supply chain management is very large. Healthcare is getting huge in blockchain because of how secure it is, and we know about HIPAA laws and all of those things that are really, really really kind of require a certain amount of security. Naisha, I will answer your question in just a little bit. We also have healthcare, we have, real estate, media. A lot of independent artists are starting to release their information using blockchain technology. There are media sharing brokerages that are starting up. Identity services. And this is something that's more worldwide than it is here in the United States, because not everyone has a passport, not everyone has a driver's license, not everyone even has an identity card to identify themselves around the world. So the blockchain is also one way of issuing identity to people and being able to keep track of them wherever they are. Now, that's a double-edged sword for any of you who read the book, what is it, 1984? Yeah, I think so. That's a double-edged sword because Big Brother's always watching. Record keeping is also a technology. It's also sitting on blockchain technology, sorry. And insurance agencies. Insurance is getting heavily into blockchain for a lot of the reasons that healthcare is getting into blockchain. So as an investor, as a potential investor, I want you to keep your eyes open and keep your ears open, because cryptocurrencies are not the only things that are going to be you're going to be able to invest in. You'll be able to invest in these other instruments as well. So it's really, cryptocurrencies are the tip of the iceberg when it comes to blockchain. And there will be some enormous opportunities to invest in the future. So we mentioned briefly a peer-to-peer network or one-to-one network. And you may be wondering, so what exactly is a peer? In its simplest form, a peer-to-peer network is created when two or more PCs are connected and share resources without going through a separate server computer. So I'll give you a very real-world example. Employee A over at Georgia Pacific wants to send an email to employee B over at Coca-Cola. Now, in order to do this, they have to open up their laptop or their computer. Employee A has to type the email and click on send. As soon as they click on send, that email then goes through a server at Georgia Pacific. That server then sends the message electronically over to the server at Coca-Cola, and then Coca-Cola's server sends that message to the individual that it was supposed to send it to, that was supposed to receive the message. In a peer-to-peer network, The individual A or employee A from Georgia Pacific would be able to send this email directly to employee B over at Coca-Cola without using any servers at all. Their computers would just speak to each other directly, and there wouldn't be any kind of servers involved. So a cryptocurrency like Bitcoin has its own network of peers. So Bitcoin has a network of peers, Ether has a network of peers, Litecoin has a network of peers. What's the other one? Ripple, which I always think is funny. Ripple has a network of peers. Each cryptocurrency has its own separate network of peers. Every peer has a record of the complete history of every transaction that's ever been made in that community, as well as the balance of every account. By the end of every transaction and upon confirmation, that transaction is known almost immediately to the entire network. So you have person A sends 3 Bitcoins to person B and is signed by person A's key. And a key is like a digital social security number. No two are ever alike. And that's very, very important. In fact, if you're taking notes, I want you to write that down. And your key is basically issued to you when you sign up for a cryptocurrency wallet. So after this is signed by person A's private key, the transaction is broadcast in the network. And then the information is sent from one peer to every other peer on that network. Now, confirmation is a critical stage in the cryptocurrency system. In fact, it's everything. When the transaction is not confirmed, that's when it has the possibility of being hacked and forged. So that's the vulnerable point in the transaction. Luckily, the transaction takes milliseconds, not even whole seconds, to be confirmed. So when a transaction is confirmed, it's set in stone. It cannot be reversed. It's very difficult to be hacked. I would normally say impossible, but there's no such thing as impossible to be hacked. It's not forgeable because it's part of a permanent record in the blockchain. And again, the blockchain is the online ledger where all of the transactions are recorded and made visible to the whole network. So this means that cryptocurrencies are not secured by people or trust. They are secured by highly complex mathematical equations. And it's very unlikely that the address of a currency can be compromised. How are the value of cryptocurrencies determined? Much like traditional stock markets, the value of cryptocurrencies are dependent on the market where the prices of the cryptos vary a lot. As I'm sure you've seen in the past month, Bitcoin has gone from what, like $5,000 to, I think it's trading at about $13,000 now per token. It's insane. It's basically an issue of supply and demand. If more people demand a particular currency and it's in short supply, then the value increases. More units can be made available to balance the flow. One thing that's very important that you will want to take a note on is that all cryptocurrencies have a finite limit. That means they have a set limit that they can issue. So it's not like the US Treasury where they can go in and just print extra money. There is a specific number of tokens or cryptocurrency that are available for each currency. For instance, the total amount of Bitcoin that can possibly be issued is only 21 million. And right now, not even all 21 million are in circulation. So there's only 21 million Bitcoins to go around for the entire world. Right now, they are predicting that all 21 million Bitcoins will be issued somewhere around the year 2140. So they're becoming more and more scarce. It also explains why Bitcoin's value is higher as compared to other cryptocurrencies, because the supply is starting to dwindle and there's more demand for it. So what can you use cryptocurrency for? There are 3 different transactions right now that can be performed when using a cryptocurrency. Trading, personal spending, and crowdfunding. Let's take a look at each one of those. Basically, trading is when you trade traditional cash for Bitcoin. When you open up a cryptocurrency wallet, you are able to transfer cash from your personal bank account into this crypto wallet that is encrypted and contains your key. Remember, we talked about a key being basically the equivalent of a social security number on the internet. It's a digital social security number. So once you have put cash into your crypto wallet, you are then able to take that cash and purchase the cryptocurrencies of your choice. Again, be it Bitcoin, Litecoin, Ether, or Ripple, or one of the other 10 or one of the other 1,200 that we discussed earlier. And Bitcoin trading can be very profitable for both professionals and beginners. Since the market's new, arbitrage and margin trading are widely available. And the currency's high volatility has also played a major role in bringing new investors to the trading market, which is what has created this absolute feeding frenzy over the past 6 weeks. Compared to other financial currencies, Bitcoin or cryptocurrencies have very little barrier to entry. So you don't have to verify your identification, like, if you go into a bank to purchase currency, or you need to trade currency, you don't have to verify your identification yourself, and you can start trading almost instantly. Moreover, most importantly, Bitcoin is not a fiat currency. It basically means that the price is not related to the economy or the policies of any single country. So the American economy can collapse, the Russian economy can collapse, UK, it's not going to have, theoretically, and I say this tongue in cheek, theoretically, it would not have any bearing or any effect on the price of Bitcoin or other cryptocurrencies, because again, they're not tied to the economy or any policies of a country. And unlike stock markets, like, the New York Stock Exchange here in the United States, you have FTSE in France, and you have the DAX in Germany. Those are official stock markets. When it comes to cryptocurrencies, there are no official exchanges. So we have hundreds of Bitcoin exchanges operating 24/7 around the world. And again, since there are no official exchanges, that means that the official Bitcoin price can be a little bit dicey, where the currency is known for its rapid and frequent price movements. And if you've been watching the markets, you know that for the past 6 weeks or so, the price has been kind of crazy. So that is the first way that you can use cryptocurrency, is is through trading. The second way is through personal spending. You can basically use Bitcoin to purchase almost anything. In fact, you can buy a car, you can travel all over the world, you can buy books. There's a whole lot of things you can purchase with Bitcoin or with other cryptocurrencies. In December 2013, a Tesla Model S was purchased for 91.4 Bitcoins. Now in 2013, 91 Bitcoins was about $60,000. So that gives you an idea of the trading power. The dealer recently well, still continues to accept Bitcoin, but they also recently sold a Lamborghini Gallardo for about 216 Bitcoin. I don't even want to do the calculation on how much that is. Yeah, that's a lot of money, but it is a Lamborghini we're talking about. You can also travel the world using Bitcoins. Cheap Air, www.cheapair.com, was the first travel agency in the United States to begin accepting Bitcoin as payment. So you could purchase your flights, you could get your hotel, your car rentals, your cruises, the whole package. In fact, they have, if you go on their website, they have an entire blog section that is dedicated to articles about Bitcoin and how they're using it. There's also another site called 99 Bitcoins, and I'm gonna copy this and I'm gonna send it to you. There's a site called 99 Bitcoins, and it keeps an up-to-date list of all the businesses that accept Bitcoins. So if you ever wonder where in the world you can spend your Bitcoins, this is the place to do it. So I am putting this in the chat box and I am sending it to everyone. It's 99. Bitcoins, XOINS, not G. List of where to send Bitcoins. There you go. I just sent the link to everyone. So if you want to get an idea of how many merchants, and you'd be surprised, it's growing. The number of merchants are growing that accept Bitcoins. There's a good list. And I think the last time they updated that one was December 7th. So it's pretty up to date, and they update it regularly. As a side note also, if you have your own business and if you use Stripe as a payment processor, you can also accept Bitcoins as payment because Stripe also will deal in Bitcoins as well as regular credit cards. So that's kind of cool. So if you're a consultant or you're a business owner and you want to start getting Bitcoins that way instead of investing in them by paying cash, that's one way that you can do it as well. Start accepting them as payment for your own products and services. Crowdfunding is the third way that you can use your cryptocurrencies, and it's also an opportunity to give back to society. You can be part of someone's success story by donating to a crypto crowdfunding project. They're usually small businesses looking for investors. One of the first crypto crowdfunding platforms was Lighthouse, and Lighthouse is now defunct. They have since gone out of business. However, there are several others that have built an entire crowdfunding platform using cryptocurrencies. Now, one of the perks of donating through the system are that you will not be charged for your donation, and funds are not released from your account unless the project meets certain criteria. And that criteria is determined by each one of the crowdfunding sites. So if they have to, have a certain number of principal officers with certain credentials, or that they have to have, the owner must have put in XYZ amount of their own money in order to receive donations or investments. It depends on the crowdfunding platform. So you have absolute complete control over the donation. The other thing is that unlike other crowdfunding or regular crowdfunding, you can withdraw from the campaign before its completion. Usually with other crowdfunding, if you're in there, you're basically in there. So your money is there. There are a couple of crowdfunding sites that I am looking at and possibly investing, and one of them is called Swarm, SWARM. Another one is Bank to the Future, and the other is Dogecoin, and that's spelled DOGECOIN.com. Those are some worthwhile crowdfunding platforms to look at when it comes to cryptocurrencies. Now, I would be absolutely irresponsible if I did not take you through the risks of cryptocurrencies. We've talked about, briefly at least, all the rosy, wonderful, great things about cryptocurrencies, but be warned, it is a hugely speculative investment. I will be honest, even though I've been investing in the market for 3 years, I am risk averse when it comes to cryptocurrencies. I'm more risk tolerant when it comes to blockchain, but I play it very, very safe when it comes to the currencies themselves. There are a host of crypto coin vulnerabilities, and hackers have gained unauthorized access to digital wallets. They don't gain access to the blockchain. They don't gain access to the data. They gain access to your digital wallet. And that partially answers one of the questions that was asked in the chat. So as recently as 2016, more than 50 million in Ether was stolen from investors in a fund known as the DAO. Cryptocurrency market prices, and this is another risk, are often highly volatile, and you have seen evidence of that over the past few weeks. The DAO hack that was previously mentioned caused the price of the cryptocurrency Ether, or Ethereum, to tumble, leading to a violent market correction. I think it lost almost 90% because of this hack. It recovered, but just the fact that a hacker was able to gain access to the wallets and get into the system in that particular way just definitely made it more difficult for people to trust it. So such events can be notoriously hard to predict, and following the pulse of the digital currency community can be a daunting task, which is why I stressed in the beginning of this presentation, research, research, research. Make sure your assets are as secure as possible. There are some crypto wallets and some exchanges that are more secure than others. And there are websites that will help you assess how secure the exchange or the wallet that you're using is. So yeah, they're starting to put some watchdog efforts around these entities. And they're springing up organically. This has nothing to do with the government in terms of watchdogs. This is springing up organically because people want to know that their information, that their money is safe. One of the most interesting things that has happened recently, and when I say recently, we're talking about December 11th, is that Charlie Lee, the founder of Litecoin, recently went on Twitter, and you are looking at a screenshot of his Twitter account and exactly what he said. He recently went on Twitter to warn investors to invest responsibly in the cryptocurrency. He was saying that people need to stop fussing over the rally in Litecoin. And in a subsequent interview, he said that the crazy growth in cryptocurrency prices is constraining their adoption, as they're mostly being used as speculative assets rather than a currency for real-time transactions. See, that's the whole reason for creating these currencies. They're supposed to be used as currency for real-time transactions, not speculative investments to drive up the price. So we're not quite using cryptocurrencies the way that they were intended to and the way that they will be. A direct quote from Charlie Lee, again, the founder of Litecoin, is that I think we're still maybe 5 years away before people actually start using Bitcoin and Litecoin in real world use as a currency. Bitcoin is very volatile, and Litecoin is even more volatile than Bitcoin. And again, that is a direct quote from the man that founded Litecoin. In the end, he said, I just want to warn people that they should invest responsibly. Don't spend all of your life savings to buy a cryptocurrency in case it drops 80%, added Lee, which is basically what happened with Litecoin. Overseas, because there are crypto coin exchanges all over the world, and this is as recent as yesterday. This was an article that came out yesterday. North Korea basically has been implicated in a Bitcoin ransom demand called the WannaCry cryptographic worm. And I think it hit the news today here in the United States more widely. So North Korea, basically, they ransomed about, they ransomed, it was $81 million in traditional money. So it wasn't just Bitcoin, but it was an entire Bitcoin exchange. And the fraudulent transfers were done through a Bangladeshi bank. So North Korean hackers are responsible for now bringing down what was called Ubit, the cryptocurrency exchange in South Korea. Most of the hacks that happen outside of the United States, I will say that. So now the Wall Street Journal reports that South Korean officials suspect North Korean hackers in a digital theft from Ubit on December 19th. That was just a couple of days ago, making it the latest victim of a string of Bitcoin repository hacks and frauds over the last 6 years. So they made off with 17% of the exchange's cryptocurrency assets and $81 million in actual cash. So again, be careful, do your research. Now that I've given you all the gloom and doom, I gave you the good news first, that you really can make money in cryptocurrencies. You can make money in blockchain technologies. So that was the good news. Then I gave you the kind of lowered the hammer, gave you the bad news about the potential risks of cryptocurrencies right now. So let's talk about why you should invest in cryptocurrency. Like we just said, it's really meant to be used as a real-time transaction currency, the same way that we use dollars here in the United States. But there are other reasons why you should invest in cryptocurrency. First are the transaction properties. Cryptocurrency transactions are fast and they're global. And you don't have to worry about conversion rates. I have some friends that travel a great deal, and we're always converting money from one currency to another. Sometimes you have to pay fees, sometimes you lose money, sometimes you gain money. So cryptocurrency is the same all over the world. And again, it's fast, it's global. Transactions are propagated immediately in the network, and they are confirmed within minutes. And since the transactions are managed by a global network of computers, they do not take into account your physical location. They really don't care where you are. You could be on the moon for all they care. As long as you have an internet connection, you're good. It's possible for you to send your cryptocurrency to someone in your vicinity or someone on the other side of the world. Another reason that you should invest in cryptocurrencies are the monetary properties. They are in controlled supply, so therefore there's a higher chance that the value of the currency will appreciate over time. Remember earlier I said that Bitcoin will probably run out of Bitcoins somewhere around the year 2140. And third, there are revolutionary properties. You have more control of what's going on in your account and how the system works and operates. And that's due to the decentralized network of the peer-to-peer. Remember, we talked about that, which keeps a consensus on account balances and how the transactions are made. Different from your bank, which your bank basically can be changed and controlled by people that you don't see and governed by rules that you don't even know. If you have ever had or know someone have the government reach into your bank account or a bill collector reach into your bank account to supposedly take money that they feel that you owe, you know that you have zero control over your bank account in all actuality. This cannot happen with cryptocurrencies. As a side note, for those of you who are serious about cryptos, there is new legislation that's on the table right now. It's called, I think it's the House Resolution 835, which I'm hearing is going to have a dramatic effect on the price of cryptos. So I'll be studying it this weekend and making it a part of this course as an update, because that's going to be very, very important. And by the way, cryptocurrencies are not taxed. That's another beautiful thing about cryptocurrencies. There's no taxation. So what have we covered in this hour? So far, we've covered the cryptocurrency and how does it work? What is blockchain and how does it work? How are cryptocurrency values determined? What can they be used for? What can blockchain be used for? Your risks. So now let's take a look at your personal action plan. And excuse me one moment, I need to take a sip of water. Now you have two choices in your personal action plan. You can either jump right in right now and begin investing, or do some more research, or you can receive some guidance on how to enter the market. And I'm going to go up here and I'm going to take a look at the question. Okay, Ms. West. Oh, we must be related somehow. This is where I get confused. What's to stop the creator of Bitcoin to take all the coins and run? How do we know the same group has not created the brokerages and now has access to our money, used to but sell and drain our bank accounts? I realize this question makes me sound like a conspiracy theorist. No, it does not make you sound like a conspiracy theorist. Without trying, and I'm going to try to make this as easy as possible or simple as possible, and not because I think anyone is challenged, only because it involves a series of very, very complex mathematical algorithms which are able to protect your money. Now, math is not perfect. It is finite, but it is not perfect. The first question, what's to stop the creator of Bitcoin to take all the coins and run? First of all, the creator of Bitcoin does not even have access to all of the Bitcoins that have been issued. Those coins that have been issued are now sitting in people's crypto wallets. Now, think of your purse or your wallet, and that's your physical wallet. Well, in order to have or own cryptocurrencies, you have to have a crypto wallet. So you have a digital wallet, and that's where your currency sits. The owner of, or the creator, I'm sorry, of Bitcoin does not have the ability to reach into your wallet and steal all of your money or out of all of your cryptocurrency out of that wallet. So no, you cannot be cyber pickpocketed. I think that's a new word, cyber pickpocketed from the creator of Bitcoin. So the second question, how do we know the same group has not created the brokerages and now has access to our money, used to, but, and sell and drain our bank accounts? I'm not 100% clear on that question. So if you can clarify that and send it to me, I will answer it. And no, you don't sound like a conspiracy theorist. These are questions I asked myself when I first started researching cryptocurrencies. I asked some other questions like, what, you want to talk about conspiracy theories? I went so far as to ask if this was really a conspiracy by the government to change up our whole banking system. I won't go too deep into what the full question was, but yeah, I kind of understand where you're coming from. So if you will clarify that second question that you asked a little bit, and I will be happy to answer it. So your personal action plan, are we, oh, that's a gut. Oh, you're on your phone, gotcha. Okay, you do feel like you understand. And if you don't, believe me, just email me, info@ healthywealthyentrepreneur.com. You guys also have access to a replay of this webinar, at least until the first of the year. I'm leaving it up until January 1st. Taurus, that is part of what we're about to get into right now, or do more research before investing. Where do you actually go to invest or do more research before investing? That is where I'm going next. Now, you know, you can't attend a webinar without someone trying to sell you something. And I'll be honest, I'm no different. I just do it at different price points. So I've created a course called Cryptocurrencies and Blockchain 101 for Total Newbies, and I call it Cryptos for short. It's a 6-module course that's delivered over 6 days, and believe it or not, this is the first module of the course. It's the introduction of the course so that you can start to understand what cryptocurrencies are, what blockchain is, how it works, and start to help you build your portfolio for maximum profitability. So since you've already been through session 1 of a 6-session course, now it's time for you to decide if the other 5 modules may be right for you. So I'm not going to do the whole used car salesman. You've watched the whole training session. I'm hoping that you have gained some insight and some information into what is possible and where we're trying to go as investors with this. So I'll just tell you, here's what you get if you invest in the full Cryptocurrencies and Blockchain 101 for Total Newbies course. And I promise you, I absolutely promise you, it's not going to break the bank. So the course includes 8 hours of course content, which is broken down into 6 modules. And again, you just finished module number 1. It has workbooks. Now, the workbooks with the paid course are a lot more robust. They're basically step-by-step manuals almost. There's also a mind map that is included with the full course, tip sheets, and the research links. So that was one of the questions that was just asked. Where do I do the research? So I have research links that I have been using for years. I have a few research links that are brand new that are inside the course. So you're getting all of that. And you also get the replays. So as soon as this presentation is done and it's rendered properly, module 1 will be uploaded into the course library, and it will be available for replay as many times as you need. Oh, and over the next 5 days, you will receive the next 5 modules, 1 per day, because they're at least an hour long, and it's some interesting stuff to try and digest. So tomorrow at 8 p.m., you'll have module 2, the day after that, module 3, and so on. You can also submit questions. There's a link in the course, and answers will be provided to everyone in the course who's registered for the course, because you may have a question that someone else has or didn't know to ask. Replays, again, are available for on-demand viewing, so you can watch it as many times as you need to. The course includes the types of cryptocurrencies, how and where to do your research, the anatomy of an ICO, that's very important, the initial coin offering. That's when a cryptocurrency is brand new and about to come on the market, and that's when you can usually get it at its absolute cheapest. So it's tantamount to an IPO, initial public offering, for a publicly traded company. You also have how to open an account to invest. In that module, you literally will be watching over my shoulder, as we say, where I will step-by-step show you how I open an account, how I fund an account, and how I purchase cryptocurrencies. So it's a step-by-step video, and it's also step-by-step instructions within your workbook. We will also go through investing strategies, how to get your cryptocurrencies for free, well, almost for free, how to purchase goods and services with cryptocurrencies, because I just gave everybody that list of companies that accept cryptocurrencies. Crowdfunding. If you have a business or a philanthropic endeavor and you want to do some crowdfunding, you can do crowdfunding with cryptocurrencies. So we'll walk through how to do that. One of the most important things, how to cash out. Now, all of these people who are running around with all of this cryptocurrency, you know, one Bitcoin is $13,000 right now. Well, how do you get your money out of the crypto coin? How do you get your cash out? So I'm going to show you how to cash out. We'll also talk about cryptocurrency loans. Believe it or not, already the cryptocurrency loan industry has started to pop up. So you can get loans in cryptocurrencies. You can get loans against your cryptocurrencies. It's getting to be a little bit kind of funny. We will also go through legislation and the future of cryptocurrencies. I just mentioned HR 835, which is coming down the pipeline, and there are some other really, really hot legislative things that are on the table right now that we need to watch as future investors and as current investors. So we'll talk about legislation and the future of cryptocurrencies. And then finally, we'll do a lovely module. This is definitely more than an hour long, on where the real money is. Blockchain, blockchain, blockchain. What every cryptocurrency is made of sits on top of blockchain, the underlying technology. So your other course modules, we had module 1, what are the cryptocurrencies and blockchain? You've done that one, so congratulations. Module 2, types of cryptos, research, and ICOs. And I go through what to look for in an ICO, because there's a lot of ICOs that are coming out now, and 2018 is going to explode with ICOs. If you do the right research and you get in on the right ICO, it could be tremendously profitable for you. Module 3, we have investment strategies and opening a crypto account. That is where I will show you step by step how to open a crypto wallet, how to input your own cash into the wallet, how to convert that cash to a cryptocurrency, and how to leave it there, watch it grow, or how to buy goods and services with it if you'd like to. Module 4, buying stuff, trading, cryptocurrencies, crowdfunding, and cashing out. Module 6 is crypto loans and pending legislation. And module 6, did I say that? Module 5 is crypto loans, I'm sorry. Module 6, blockchain investments and opportunities, and what to look for next. That's the biggest thing, that's the very important thing. So what is your investment for all of this information? Well, it's Christmas time, it's the end of the year, and I appreciate all of you staying. In fact, everyone, wow, that started with me is still on the call, so I appreciate that. The offer, let's see if I can pop this up. There we go. Your investment is $27. And I'll tell you why. Number one, like I said, it's Christmas time, New Year, New Year's special. I'm more interested in getting the information out to the right people and helping people get to that goal than I am making money for it. This is a newly created course, and I appreciate all of you staying, but I'll be honest, you guys were my guinea pigs for this course, so the least I can do is give you the course at a huge discount. The offer ends, it says 2 days, 23 hours, 59 minutes, and 20 seconds. I am going for this group, I will leave the offer open until January 1st. So for the $27, we'll backtrack just a little bit. For the $27, that's what happens when you go too far. You will get the entire 8 hours of course content, the workbooks, the mind map, the tip sheets, and the research links. And all 6 modules. What are cryptocurrencies and Bitcoin and blockchain? I'm sorry, we know what Bitcoin is. The types of cryptos, research and ICOs, the investment strategies, all of that information, and it will cost you a total of $27. So the link for that just opened up to your right. So if you click on add to cart, it will take you to the order form, which is $27. You will have access to this module. Tomorrow night, you'll have access to module 2. Saturday, which is the big one, you'll have the strategies and how to open the crypto account. That's the big one. Sunday, you'll have buying stuff. And I know Sunday is Christmas Eve, so you probably won't even have a chance to do, most of you probably won't have a chance to do anything. Buying stuff, trading, crowdfunding, and how to cash out. Monday, which is Christmas Day, everybody's opening presents and stuff, crypto loans and pending legislation. And then module 6, blockchain investments and opportunities. And again, for this group, I will leave the price at $27 because as soon as the stroke of midnight hits on January 1st, 2018, the price will go up to $97. So you have a great opportunity to grab this one and give me some feedback. Let me know what more information you'd like to see, because I'd like to do some updates, and I will be updating this course probably on a quarterly basis because this market moves a little too fast for this course not to be updated. So again, investment of $27, click to your right. And I thank you so very much for your time. And let's see, I'm going to questions over here. For Canadian investors, understand we need to use special exchanges. You know what, Deb, that's a really, really good question. And thank you for calling that to my attention. What I can do is add a module for Canadian investors. You've just given me a great idea. Yeah. Okay, so that's what I will do. I will add in because I'll be honest, most of the registrations that I saw when they came through were from the United States. But Deb, I'll tell you, Deb, do not register for the course just yet. I'm going to make you a special deal since you gave me an extra great idea. TARS, how long will you have access to the modules after you purchase? You have lifetime access. So basically, once you bought it, you've bought it. And additionally, I can send you the videos if I ever decide to change platforms or I ever decide to take the courses down. But right now, it's a lifetime subscription. You bought it at $27. Are there any other questions that I can answer for anyone? Okay. I will take that as a no. And I want to thank you for your time. Again, my name is Dr. Kimberly N. West. I am also known as the Healthy, Wealthy Entrepreneur. And I teach people how to be healthy, how to be wealthy, and how to be great business owners. So if you do need to reach me, you can always reach me at info@healthywealthyentrepreneur.com. And in your emails, you should be getting a link to the replay of this video shortly. It's going to take a little bit of time to render and for the technology gods to do what they have to do. And you'll be able to rewatch this as many times as you need to. Again, thank you so much for your time. I appreciate you, and I'm wishing you love, light, and prosperity. Have a wonderful evening, everyone. Thank you.